Hey everyone, Chris Johnson here with Monday Morning. I'm going to take 10 minutes and walk you through a few things about Meta stock that most people aren't thinking about that are going to allow you to buy it for 9 to 10% cheaper than where it is trading today. That's right. This is the company that blew out Wall Street's expectations for earnings, went up 20%, and you're going to get a chance to buy it on sale over the next couple of weeks. You'll thank me later. Let's jump into it. All right, everybody, let's get into the nitty-gritty on Metashares. I don't think it's a secret. The company blew out numbers last week. Their earnings came in 51 cents better than expectations. That's better than 10%. Revenue was up 27%. I mean, this stock was what I refer to as being priced for perfection ahead of the announcement. I'll explain that, the psychology that goes behind it, and how it's going to give you an opportunity to buy it cheaper in just about 2 minutes. But the stock did just resoundingly well after this earnings announcement, and I don't think that's a big surprise. It was up 23% in 1 day's trading. 23%. To give you a little bit of background, Meta has gone up 29% once. That was way back in 2013, July of 2013. I'm not going to go through the chart because it'll be a little boring, but all you need to know is the stock's going to act today like it did back then. And it gave you about an 8 to 9% pullback or opportunity to buy it. Again, it comes back to investor sentiment, the psychology of trading. When we see a stock that goes up 20%, 25% in 1 day, sure, everybody wants to jump on it. You feel that FOMO. But if you wait, what you find is that the people who were in the stock before it went up that 23% want to take some profits off the table. And I always stress to everyone, profit taking is not a bad thing when it comes to investing. It's a natural feeling, but it's not natural to want to buy a stock when it's trading at its highs the way it is right now. Warren Buffett even kind of warns us about it when he says, don't buy when the crowd is overly enthusiastic. Buy when there's blood running through the streets. Now, you're not going to see any blood running through the streets on Meta right now. This stock is going to be on a tear. Analysts are getting even more excited about it. I mentioned that you saw the analyst community, 97% of them as buyers of the stock going into the announcement. Look at what happened. And last Thursday, after the announcement hit, I walked through the fact that everybody was bullish and that you could only see one thing that was going to drive the price higher, and that is target price upgrades. We've seen exactly that. 28 analysts have upgraded their target price over the last 2 days on Metashares. It was $417. Mark that number down. We're coming back to it in just a second. It was $417, and now, after 2 days, $530. It's $529, but we're friends, so I'm going to call it $530. 27% higher, $530 is your new target price for Metashares. And believe me, it is going to hit it during 2024. I can almost guarantee. We can't obviously guarantee it, but this stock is going to be on a bullish trend for time to come. Why? Because they gave us a great earnings report and they made a couple of shareholder-friendly moves. The company announced a 50-cent per share dividend. This is the first ever for Meta. Remember back when Apple did this, they declared a special dividend? This is the kind of thing that long-term investors love. People who have it in their 401ks, their IRAs, all of that. They love to see companies pay dividends. It returns capital to shareholders. That's why we all get into this, right? The second thing is they announced $50 billion in additional funds as a stock buyback program. So they're going to be buying more of those shares. Scarcity is a great thing when it comes to Wall Street and investing. And the company's trying to, again, return some of that capital by buying back those shares. So 2 moves, they're going to make the long-term bulls even more bullish, and $530, believe me, is going to be in the rearview mirror. I don't want you to buy this stock at its current levels right now. We're trading up around $460. I'm going to show you how you're going to get an extra $40 out of this stock over the next 2 to 3 weeks. Now, it is no surprise. I've been calling for the last week or so for a 5 to 10%, maybe even a little bit more correction in the market. Over the last few days, Chairman Powell, told us that interest rates are going to stay higher for longer, right? That's adding a little bit of pressure right now to Wall Street. We're seeing some selling. you're going to see the profit takers going to come in and they're going to start to act on the psychology part of trading. In other words, they don't want to see the stock pull back to $425, $430. They want to lock in profits and buy the dip. That's exactly what you're going to get a chance to do. Let's take a look at the chart right now and see what I am looking for and what I'm targeting as a buy price on Meta. And let me just put this out there. I am not a holder of Metashares right now. I want to be in. I'm not going to be buying it for $460 a share. I am going to be patient and get that 9% discount. Here's where it comes in. And keep in mind, July 2013, the stock actually rallied 29%. We've seen this before with Metashares, right? We've actually seen this type of activity. Back then, it pulled back 8.95% from its highs and gave you an opportunity to buy it on the dip. Be patient here. Here's how the chart plays out. Right now, you're seeing the stock after cresting above that $475 level. We're seeing the stock start to pull back. Now, a couple of things I'm going to point out on this chart that normally we don't go into this type of detail, but it is important right now for where Meta is trading. This little pink line, it's what we call a Bollinger Band in technical analysis. I'm not going to get too into it, but basically, what you need to know is that this has to do with the normal distribution of a stock. Notice how the price tends to stay inside of that pink line. It comes down to math, just like the rest of the market. Whenever we see a company break out of the normal distribution, get way out there in terms of their price activity, volatility is what causes that, you typically see the stock pull back. That's what happened back in 2013 and a number of other times. But notice, again, how the stock tries to stay within that distribution, and the distribution can get wider and more thin, but it generally follows a pattern. Right now, Meta is trading way outside of that pattern and is due for a pullback simply because of math. I'm going to put it that simply. The other thing is, as I said, profit takers are coming in. Sell the news is that thing you're going to hear. Don't buy the stock at its highs. The market's going to give you that opportunity. In this particular case, watch for it to break down below that 450 level and then continue to move lower as people start to fear that, hey, this is going to get a little bit out of hand, and the market pressure is going to add to that. Another thing I'll point out in this chart, notice this big bar right here. That's the stock's volume. That is kind of like firing all of the guns at once. Everybody jumped in on Friday after that earnings announcement. It comes down to buying power that's available in order for Metashares or any other stock to continue a trajectory like that. It's just not there. There aren't enough buyers right now. Some sellers have to come in and create an opportunity. That's why this volume spike tells me, hey, wait for this stock to cool off. This is what I call a crescendo in volume. Everybody's in at the same time. Finally, right down here, this line I normally don't have is the stock's RSI. It's relative strength index. It basically gauges how far the stock can go before it's considered overbought. We hear that all the time. This is one easy way to see it. The RSI gets above a 70 level. And that's, again, we're not going to get into the details. Just know the basics here. Whenever you see that happen, the stock tends to pull back. You don't have any instances on this chart. And this is the last 3 months where the stock's been overbought. So 4 reasons there on the technicals. Number one, math. Outside of what we call the Bollinger Bands. It has to pull back to get back into a normal distribution. 2, you've got that crescendo in volume. All the buying power has been spent in the last day, 1 day of trading. And then 3, that RSI is way above overbought. It is stretched beyond reality. Wait for the opportunity. Now, where is that price going to lie? Where do I see the buy the dippers really coming in? Where am I going to buy it? Remember, I told you 417, 419, right around that area was the old target price of Wall Street. That's where they raised their prices from that level up to well above $500. That is actually very close to the neighborhood of where I see the stock. In order to get a 9% pullback, which is what I think you're going to see the stock pull back right in here to around $420. $420 is that line in the sand where I'm going to look at this and say, yes, this is a great opportunity to buy the stock. What would be a better price on a pullback? $400. Wall Street, traders, investors, everybody love round numbers. It comes back down to the psychology of investing. We just are attracted to large numbers. The more zeros, the better. If you look at the S&P 500, the Dow, whenever we cross those 1,000-point marks, 10,000-point marks, everybody gets excited, but you usually see corrections. Same thing's true with the stock. $400 is a price that I'd really get excited about. I don't think you see it. As for where the stock goes from here, obviously 500 is the next target just because of those round numbers. That's a 25% increase if you saw it go down to 400. I don't think you get the chance. 420 is where you buy it. $80 at that point, you've got a great return, and I think you go well over that $530 price target from Wall Street. I think you look at a situation where Metashares can go as far as or even higher than $550, even bigger than that over the next year. Meta has pulled off one of the biggest and best turnarounds in large cap technology that we've seen in decades. Just a little more than a year ago, people were walking away from this stock as they feared that it had strayed from their business model that had really paid off over time. But Mark Zuckerberg and the management team have shown us that they are on track, while at the same time still looking into the metaverse. But nonetheless, the company at its foundation is providing value, returning it to shareholders, and as a result, this is one of those stocks that I absolutely want to buy the dip. 420 is your price target that you want to buy at, and I'm looking for 550 and better over 2024. So make certain that you keep an eye on the buying opportunity that's going to develop in Metashares. That's it. Make sure you like, share, subscribe, do all of the things. Make certain that you're here with us finding these opportunities in the market at Money Morning. Until the next time, I wish you the best trading success. Have a great day.